All right, it's Mackey's Retail Roundup Live. I'm Spencer Israel, Stock
Mhm.
Market TV. That's Jeff Mackey from Mackey's Retail Roundup. Jeff, it is a big week. It's a big month for you.
It is.
We of course had the latest CPI readout today, full of nuance. That's why you're here to talk about it for us. And then we'll also preview some of the earnings coming up in the coming days and weeks. Does that sound like a plan?
That sounds like a great plan,
All
Spencer. It's
right.
an exciting time.
Let's do it. First, gotta give me a lay of the land here. This is, of course, the Consumer Discretionary XLY ETF, sort of the largest proxy for your neck of the woods here. So, how we doing?
You can chop it up a lot of ways, but yeah, it's we're getting frisky. It's getting frisky. We'll get into the CPI, we'll get into the bull case, the bear case, but what's undeniable is here we are again, old friend, my nemesis level on consumer discretionary, and a lot of the names is go figure. The components kind of resemble the index as a whole. That's kind of the idea, but it's we're back at these levels again, and stuff keeps not breaking. And it's not breaking enough that you can make a little bullish case. We've got a little, it's a little spark in the forest. We're kind of blowing on it. We're tending to it, trying to nurse it into a flame. But next week when we go into earnings, it's a make or break time because there's no place for stocks to go higher without actually just being a breakout and flat out. We got to buy consumer names.
All right, let's talk about the CPI report for this morning. As I
Yep.
said, a lot of nuance here. There is inflation. There isn't inflation. It came in line with estimates, but the 3 months is greater than the 6 month, and so many things and ways that you can slice this report up. First, give us the overall. What is like the most important takeaway from the CPI report?
You just if you want inflation, you kind of have to make it up. I'm here to dumbify boring stuff for people, Spencer, just to kind of and I look at this and I'm looking for big, huge numbers, and they aren't there yet. And you can say, well, they're supposed to be there, and I was told they would be there, and I was told all this inflation was coming, and that was awful, and this was going to be terrible. It's not there. And what's more, the inflation that you see stuff in, like airline prices, well, the airlines are pretty good these days. They've gotten to be better businesses over the last 50 odd years in terms of gouging people for whatever they're willing to pay. So that would be a sign that maybe the economy's not terrible. Maybe if everyone's going to Disney World and Disneyland and the parks put up their umpteenth quarter in a row of crushing numbers, it's not all that bad. It's a lot of stocks have been taken to the woodshed. 60% of the consumer facing names that have reported so far, according to Deutsche, are actually down. But it's minus 2% comps at Starbucks. I took it to the woodshed, but I tell you what, it's not a catastrophe. And we're kind of seeing a little action and stuff like Toll. A lot of names reporting next week. The stocks are getting frisky. And there's no denying it. You can't deny the price action. You can't deny the numbers. We're seeing kind of the best type of inflation that you want. Now, there is a counter case to all this, but for now anyway, it's the prices just aren't that bad.
Well, you say here, still no inflation except for, of course, rent and furniture and electronics. So there is inflation in some things, but in the aggregate, it really hasn't shown up the way that people thought maybe it would a few months into
At least,
a trade
right,
war, right?
right. I mean, it's
Right.
and yet. Now Goldman came out already, and then they sort of in anticipation of this, they had to pee in everyone's Cheerios just because that's what guys or economists and work for Goldman like to do. It's we've talked about this before too. The idea that there's only three things that could really happen with a tariff is that the U.S. business just pays for it and says we're just going to it's just going to crush us. Eat the tariff. That's what Trump means. He means don't raise prices, don't grind your suppliers. You can stick it to the exporters, and if you're Walmart, just say, you know what, we're paying you less now because our president's kind of crazy. Or you can raise prices in the stores. The raise prices in the stores one is the one that freaks out the market the most. What we'd really like to see is the foreign exporters sort of pay for it in a way. Not that they pay anything at all, but rather just kind of take their profits down a little bit. According to the guys at Goldman, the bearish case is that you really wouldn't see inflation yet because the tariffs haven't really started yet. And we saw a lot of pull forward. We talked last week about Skelly the skeleton being on display at Home Depot. Home Depot reports next week. That stock's getting frisky. How is Home Depot getting frisky if the economy's so damn bad? And Goldman says that the answer is that, well, you're not going to see the economy get bad until next month or a couple months down the road. Whatever. That's fine, but here we are with one CPI number in, and plenty of excuses for it. But look at the price action, getting giddy.
Well, we'll find out if they're right. How about that? Ask me again in a month or two. We'll see what's going on. Let's talk about some individual stocks, though. We are, as you said, coming into the retail earnings portion of the earnings season. I guess Walmart is sort of the one that kicks things off for you. They report next Thursday.
Kicks things off for me, but kicks things off for capitalism, Spencer.
Okay.
Earnings season doesn't start until Walmart starts. This is the Super Bowl of the British Open of the Tour de France of earnings reports. It's the most important company on earth. You can listen to what your CPI data says, or you can listen to Walmart. I'd rather listen to Walmart because they're selling like $2 billion worth of crap to Americans every single day of the week. And to me, they're going to have a pretty good tell about what's going on. Now, remember, we saw Amazon. For all the things that people like to complain about with Amazon, don't even mention retail. That's the second biggest retail on earth. And honestly, they don't, we don't talk about that. It's a little side hustle. We make about $400 billion a year in revenue. It's just a thing. Their numbers were amazing.
It's not a retailer. It's a cloud computing company now, an AI company, right? It's not a retailer.
Balderdash, man. I mean, it's but what they say to us, we can't, everyone just kind of dismissed it out of hand because our fancy data models and the just kind of grouchy assholes at Goldman. They're telling us that stuff's going to be terrible. And Amazon's like, you know what? We're not really seeing it. We both sell our own stuff. We sell stuff for third parties. Those are two huge businesses that we have as Amazon. And, we haven't really had to raise prices that much, kind of scattered it around a little bit. And we saw great demand. They grew 10% kind of across the board. That's a lot for Amazon. That's a big company, whatever kind of company you think it is. That's a lot for a retailer to grow. It kind of sets the bar high for Walmart. It hasn't been a problem for Walmart so far, really, in terms of at least the results. It's kind of an expensive stock. But look at that chart. Like I said, there's no place for this to go without all of a sudden that becoming an uptrend.
That Walmart chart. So knocking on the door of all-time highs here. Here's Walmart and Target, sort of the two largest pure play big box retailers we have left in the country. I guess you could throw Costco in there as well.
These guys both report back to back. And so Target gives it's their good example, as I've talked about with you before. Amazon, Walmart, and Costco are the three big kahunas that really, no matter how this tariff turns out, they're like, what's going to happen is we're going to take share and dominate the universe. So we'll be fine. Target is not that. Target is like the 300-pound gorilla. What's a 500-pound gorilla do? Whatever it wants. Target's about 300, so it's going to get batted around a little bit. The 500, like Walmart's just kind of eating their lunch a little bit. They report back to back. Target had the temerity to actually report ahead of Walmart this quarter, which I can't remember that happening ever. But they're going to set the stage on Wednesday. We hear from Walmart on Thursday morning, and this is going to be kind of Target's going to be the canary in the coal mine for if you're just sort of a mid-size retailer. If you're not Amazon, how bad are these tariffs hitting you? It's because Target doesn't have the juice necessarily to go in there and make their suppliers eat it. They aren't good. They're merchandising well enough to allow them to raise prices and still see demand. So that quarter is going to be kind of a sneaky must tell. Another stock, as dark as that is, and poor little bullseye. You see the skeleton bullseye that I drew, Spencer? I want people to appreciate the art form here just for a moment. But it's that stock's getting a little frisky. It's over 100. It's I don't think much is going on there in the stores. They certainly have a lot of room for improvement and maybe a new CEO chatter, but that stock shouldn't be behaving as well as it is just based on the fundamentals. If you buy anything about where the economy's going,
what sort of buzzwords, phrases should we listen for on these calls that are potential red flags or maybe just BS excuses from the company?
You're going to hear a lot about mitigation.
What is that?
We're mitigating the tariffs, which is just a fancy, stupid kind of. It's a word that's fancier than it needs to be. It means we're going to stuff our suppliers or the consumer. That's the mitigation strategy. We're going to raise prices, or we're just going to tell the foreign suppliers of these goods that we're not buying as much.
Okay.
And that's how we're mitigating is we're jacking up prices. So it's just kind of fancy talk for grinding people out. But you don't want companies to be making their plans. This is what happened to Gap last quarter. They had a lot more mitigation chat than people wanted to say. What you want from the tariffs is what we heard from On Holdings this morning, which is we over mitigated. Our gross margins actually were higher. Things are just kind of fine at the better operations, and so you want these companies to have a tight ship. You want comp store sales to be strong. You need a plus number on comp store sales, and Target's had a real problem with that revenue in the past. From Home Depot, you're going to want to see any good chatter about something other than Skelly the skeleton and how Home Depot decided to start Halloween like 2 months early.
Well, Home Depot chart. I mean, a lot of these charts kind of they look the same, Jeff. I mean,
And they're not down, right? I mean, am I mistaken? Because they kind of seem like they're going upward to the right. If a dead cat bounce just kind of keeps going higher, all of a sudden it's an uptrend. I'm not a certified technician, but I believe that makes sense. That's an idea.
all right. So we got Home Depot, we got Target, Williams Sonoma's, different flavor, but
It's houses though. That brings us to Toll because again, Williams Sonoma shouldn't be behaving well if we're all going to go bankrupt. Toll. When was the last time people liked Toll? Like nobody likes the home builders. This is priced as though some crackpot's going to fire the head of the Fed and make someone cut interest rates. That's what this is priced like. It's look at Toll all of a sudden getting a little love, way off the lows. They report next week if they say anything good. Restoration Hardware is up 8% today. 8% on one kind of weak, suspicious CPI number. And as I'm always saying, prices, the market is determined by the fundamentals, the technicals, and a little bit of the narrative, a little bit of the story, a little bit of the sauce. And some of these, like RH, it was 450 6 months ago, 8 months ago. That makes it kind of feel cheap. It's an endlessly promotional hype guy in the corner office who's famous for squeezing the crap out of shorts. And it just seems like it's a little stale to the downside. Abercrombie and Fitch, who loves to, the mall stocks are absolutely roaring today. Abercrombie back up over 100. You know what they say about stocks? They go to 100, Spencer. But they're probably going higher.
They go to 200.
They go to 200. Sure, why not? Listen. Abercrombie. It's been so slaughtered, and it was a $200 stock at the beginning of this year. And what they mostly did was just kind of show up. And business normalized a little bit. If you look at their last quarter, it wasn't that bad. That stock is undeniably frisky. That young man in the Santa hat, he feels attractive for the first time in like 6-7 months, Spencer. And good on him. Good on him. Good on the stock.
Abercrombie was 200 like a year, like last May of last year. Yeah.
And it's just been getting kneecapped, but they're gonna drop off at the beginning of this year.
Yeah.
I mean, what they did? They opened their freaking mouths. I mean, just murdered. Just annihilated.
What an insane run this stock had. It went from like 20 to 200 in the span of like a year. And now it's gone from 200 to what down it got down to like the high 60s, the mid 60s.
It got down to the mid 60s. And I tell you what, of these specialty names, I talk about how this is where love goes to die. I mean, you don't buy and hold forever. Abercrombie had its run. You respect the downtrend, but after a while, you come back to Abercrombie, and it turns out part of that run was momentum, and part of it was just became a much better company than it was before. They've got two divisions there.
The Abercrombie chart's interesting because if you go look at their last earnings report, it had a huge gap up and gave it back basically immediately. Right.
Immediately. It was ruthless. That was the first time it kind of stuck its head over 100. And you know what the market said? You're not quite ready to be up over 100 just yet, and smashed it with a lot of vigor, a lot of top spin on that one. That was not friendly for the kids at home. But it's now we're just picking up some momentum. Yeah, that's a little spike there. Squint and you miss the pimple that was the glorious rally of May. So they don't report for a while, but again, it looks like an uptrend to me. Honestly, it's a long way off.
It looks pretty appetizing. I'm not gonna lie. This Abercrombie
and can go much higher. It's a hell of a narrative, and you've got a relatively cheap company that's actually executing things pretty well. The idea that no one's going to shop again, that's just a little tired. That's just we're a little worn out with that, and the results, frankly, haven't been that bad. For every Starbucks, there's been a Bros. There's been someone, I mentioned On Holding. It's got it's a stock from our past. but we might be there again. But the quarter was undeniably exceptional. So the consumer is showing up in places where it perceives value and wants to shop. And so life is a little harder for bad retailers, but that's the way life works.
All right, to summarize all this up, it kind of sounds like we should be looking for retail stocks to buy. That's kind of that's what I'm getting from you.
I think the risk reward is just kind of shifting over. I think that, and where you want to go, it's the home related stuff is cooking. I'm really looking forward to Toll Brothers, looking forward to Home Depot. Any type of enthusiasm out of Home Depot would be the first enthusiasm that you've heard for like 3 years. And that would be nice. That would be refreshing. If you hear something good from Target, I mean, holy cow, it's just buckle up and expect a miracle of some sort. But that stock looks undeniably like there are just buyers there. Maybe we priced in too much pain. You told me weeks ago, Spencer, and it was a moment of clarity and wisdom. You said maybe things aren't going to turn out so horribly. Maybe things will turn out fine. Maybe it could be. Maybe this will be the biggest Christmas ever for the 2025th consecutive year. This could be the biggest Christmas ever. That would surprise a lot of people.
Every Fed meeting is the most important meeting ever. Every Super Bowl is the biggest Super Bowl ever. And yes, every holiday season is the biggest holiday season ever. So I wouldn't bet against that. That's for sure.
But not right before the biggest earnings week in history, which is next week.
Yeah. Yeah. Look, I think the running theme here and sort of the through line of your whole analysis and worldview is pretty much in the long run, you probably can't bet against the American consumer. You can bet against them in for very short periods of time, for weeks or months, but in the long run, probably not, because
they'll have an off quarter or two, and there's always longs and shorts out there. It's a stock pickers market as always. But listen, the price action I'm seeing is much better than you would expect with sign of the beaten brow. Enough of these little rallies, we have been selling them off over and over again, but you're seeing a 4%, 5% pop in a lot of these mall names, and they've been given up for dead. The narrative has gotten much better. It's super tired to say we're going into a deep recession and the dollar's going to crap. And if you get a rate cut, stocks go parabolic. It doesn't make a lot of economic textbook sense, but we checked the textbooks a long time ago.
Yeah. All right, we'll have to see. A lot coming out in the next few weeks on the earnings front, and Jeff will be also doing a special live event next week. We'll talk more about that in the coming days. Like I said, this is a critical time of the year for you, Jeff. You got the earnings, you got the CPI today, we got the start of the holiday shopping season coming up, according to you, Labor Day. So,
according to me and Mr. Home Depot, come on, there's pumpkin spice is going to be out next week. Pumpkin spice, that's true. Oh, boy. Would I lie? Do I lie in this form? It's actually a couple weeks, but I'm excited.
Listen up, everyone. If you want to find out what stocks Jeff is buying and selling, he just sold a couple of stocks out of the portfolio and bought a new one. The link to that is in the description. That is to Mackey's Retail Roundup. If you want his free content, his free emails, he sends out a few times a week. That went out this morning. That's also in the description below. That's the retail report. And other than that, Jeff, we'll see you next Thursday. We'll have some data to talk about. So
buckle up. I'm back into the homework assignment, Spencer. And you study up as well. It's a big week, son.
It's a big week. We'll see you next week.